Internal Revenue Service IRS tax news. Closing a corporation. A corporation is a separate tax-paying entity with shareholders that exchange money, property, or both for the corporation's capital stock. A corporation conducts business, realizes net income or loss, pays taxes, and distributes profits to shareholders. So when we're thinking about a corporation, we're thinking about now a separate legal entity, and therefore the closing of a corporation can be a little bit more complex. Now, there are also variants on the corporate type of entity where we want a separate legal type of entity, and that could be like an S corporation, which is still a flow-through type of entity, and a limited liability company, still a flow-through type of entity. But even so, part of the benefit of them, even though they're flow-through entities, is to have that separate corporate entity so that you have, well, one reason might be that you want more liability protection for it. But of course, to close those types of entities now is actually a little bit more complicated now, because now we have something that's not just basically thought of as an extension to the individual, such as a sole proprietorship or even a partnership, but now a separate legal entity, and you want to make sure that you close that entity up both on the federal level and on the state level if you need to close it so that it doesn't cause you problems in the future as you push forward. Back to the text. S corporations, there's a link to the S corporation here, are corporations that elect to pass corporate income, losses, deductions, and credits through to their shareholders for federal tax purposes. Shareholders of S corporations report the flow-through of income and losses on their personal tax returns and are assessed taxed at their individual income tax rates. So many smaller companies probably step up not to an actual C corporation, but to an S corporation, oftentimes because they want the benefit of having a separate legal entity, but do not want the negative impact of a double taxation when they pull the money out of the corporation. Therefore, the S corporation is intended to provide the best of both worlds, to have a separate legal entity for purposes oftentimes of liability protection purposes, and have the flow through to the individual, now shareholders, owners of the company, that will then be taxed on the level of the individual tax return, eliminating the double taxation on both the corporate level and then the personal level. So we still have basically another entity, however, when we're talking about the closing process, that we're going to have to now be closing out. Corporations must take certain actions when ceasing operations, whether they've been in business a few months or many years. Here's information on typical final forms and schedules that a corporation going out of business needs to file. Income tax returns. A C corporation must file a Form 1120 U.S. corporate income tax return. They report capital gains and losses on Schedule D. So that's the separate tax return 1120. And we're thinking, obviously, the corporation now, because they're a separate legal entity, you kind of think of them as basically another person in essence, right? They got to file their own taxes now as a responsibility of being a separate entity in of themselves. So you have to file that final tax return and make sure you kind of close the corporation, or you can think of like, quote, killing the corporation, not like in a violent way, but laying it, killing the corporation's got to go away here. And unless you close it, it will not, and it could cause you troubles. So then an S corporation must file Form 1120S U.S. income tax return for an S corporation. They report capital gains and losses on Schedule D. So although the S corporation is a flow-through entity, a separate form needs to be filed for them still, and that's going to be the 1120, now the 1120S. So you got to file the 1120S, make sure you get the final 1120S filed. And oftentimes this is an issue with the states as well, because depending on the state you are in, these separate legal entities, such as S corporations even, and possibly limited liability companies, often charge like a tax, quote tax, or quote a fee, or something, whatever they want to call it, for the filing each year. So if you don't close it out properly and you don't pay all your taxes, then they're going to keep on charging this quote fee that every year, and then and that causes a problem. It could build up. So you want to make sure to close out the corporation on the state level as well, and make sure everything is done properly so it doesn't come to haunt you in the future. For the tax year in which the corporation ceases to exist, filers need to check the, quote, final return, end quote, box, which is near the top of the front page of the return below the entity information. They do the same on the Schedule K1, shareholders' share of income, deductions, and credits. So you want to check the box off saying, hey, this is the final return. There's a little checkbox, so you check that off. Just remember that just because you sent in a final return with that little box checked off, however, that may not solve all your problems to close up the corporation, because like we say, if there's something that's going to be due, like if there's taxes owed or something like that, then the IRS will not basically close the corporation. And then once the next year has started, now you have another year in which has passed that the corporation wasn't closed, and the state will probably then want another tax return, even though you checked off the little checkbox saying the last year was the last tax return. And so you got to make sure that everything is basically wrapped up all in the same year to get this done. They must file Form 966, corporate dissolution or liquidation, if they adopt a resolution or plan to dissolve the corporation or liquidate any of its stock. Also, corporations may need to file these forms with their Forms 1120 or 1120S, Form 4797, sales of business property, if they sell or exchange property used in the business. They also need to file this form if business use of certain Section 179 or listed property drops to 50% or less. Form 8594, asset acquisition statement, if they sell their business. Employment taxes, corporations with one or more employees must make the federal tax deposits. So you still want to keep up to date in your payroll information. Remember, the payroll information is kind of one of the most dangerous things to not be kept up with, because of the complexity with the payroll that you have to be dealing with. So it's more difficult to kind of unravel what is actually owed, and because there's an intertwining of the responsibility of the employee and the responsibility of the employer with regards to withholdings. You're withholding, and you're really talking about taxes that are the employee taxes that you are then giving to the government. Because of that complication, you don't want to get into if you're dipping into cash flow problems, you typically don't want to be cutting on the payroll tax payments for that reason. You want to keep up on the payroll tax payments, whenever possible. So if corporations don't withhold or deposit income, Social Security, and Medicare taxes, the trust fund recovery penalty may apply. The penalty is the full amount of the unpaid trust fund tax. The IRS may impose it on all persons who the service determines is responsible for collecting, accounting for, and paying these taxes, and who acted willfully in not doing so. So they can be quite harsh on the payroll taxes, and implying this penalty, because again, they kind of think of it as taking money from the employee and then not paying it as was kind of promised, even though you're required to do so. So if you run into cash flow problems, it's quite possible that an employer is saying, hey, I still want to pay my employees. I have the money to pay them. I'm just going to scrape everything together to give them the net check. And then the withholdings, I don't have the money even to pay, the withholdings to the government. But the IRS sees it as, now you paid them the net check instead of the gross check. You took the withholdings out of it, and then you didn't pay the government the withholdings, which is really their money. And so they see it as like a double, not just not paying your taxes, but also, taking the money from the employees, even though, it's kind of part of your requirement to take them. Anyways, so try to pay the payroll taxes on that. So a responsible person can be an officer, an employee of a corporation, an accountant, a volunteer, director, trustee, or someone who signs checks for the corporation or has authority to cause the spending of the funds. Corporations need to file Form 941, Employer's Quarterly Federal Tax Return, or Form 944, Employer's Annual Federal Tax Return. So if you stop in the middle of the year, you want to make sure that you file the 941s, the quarterlies, up through the quarter in which you have completed, and then make sure that even if you stop in the middle of the year, you complete the final year information, including the 940 and the W-3 and the W-2. So for the calendar quarter in which they make the final wage payment, that's when you got to do the 941s, they check the box and enter the date final wages were paid on line 17 of Form 941, line 14 of Form 944. So you check the little box saying, hey, this is the final time I'm going to be doing the payroll here. They must attach a statement to the return showing the name of the person keeping the payroll records and the address where those records can be kept. Corporations must file Form 940, Employer's Annual Federal Unemployment, or FUTA, tax return, the calendar year in which the final wages were paid. So again, if you stop in the middle of the year, you want to make sure you still do that 940 that will happen at the end of the year. They need to check the box D in type of return section to show that the form is final. Corporations also need to provide Form W-2 wage and tax statement to their employees for the calendar year in which they make final wage payments. Generally, they furnish copies B, C, and 2 to the employees. They file Form W-3, transmittal of income tax statement, to transmit copy A to the Social Security Administration. Reporting due dates, visit irs.gov for information on employment tax due dates. Other reporting for corporations with employees. If employees receive tips, corporation must file Form 8027, Employer's Annual Information Return of Tip Income and Allocated Tips, to report final tip income and allocated tips. If the corporation provides employees with a pension or benefit plan, they need to file a final Form 5500 Annual Return Report of Employee Benefit Plan. Corporations that pay contract workers. Corporations report payments to contract workers who they've paid at least $600 for service, including parts and materials, during the calendar year in which they go out of business on Form 1099 NEC, non-employee compensation. So the 1099s is the other kind of item that if you stop in the middle of the year, you may kind of just say, I'm done with this by the end of the year, but you want to make sure that you follow through with it. Make sure you definitely follow through with the payroll stuff, because that can come back to haunt you in the future. And then you obviously want to do the 1099s, which shouldn't be too much of a burdensome thing to make sure you get those out as well for that final year of operations. So some filers must file Form 1099 electronically. Those who file paper forms must also file Form 1096 Annual Summary and Transmittal of U.S. Information Returns to transmit paper copies of Form 1099 to the IRS. Record keeping. How long a business owner should keep a document depends on several factors. These factors include the action, expense, and event recorded in the document. Businesses should keep records relating to property until the period of limitations expires for the year in which they dispose of the property in a taxable disposition. Business owners should keep all records of employment taxes for at least 4 years. Employee identification numbers. Once the IRS has assigned an employer identification number, an EIN number, to a corporation, it becomes the permanent federal taxpayer identification number for that business. So the EIN number, the employer identification number, sounds like a number that you would just need for your payroll information, but it's really like the corporation social security number. The IRS thinks of the corporation as basically a number, as they do with us, right? So that's the social security number, and this is the EIN number, or the employer identification number. So you're going to want to close out the employer identification number as part of the process to closing out the business, but you can't really do that until everything is wrapped up, because if you owe any money, or if there's any problem outstanding that the IRS ties to that social security number, they won't be able to close it until that payment or problem has been fixed, solved, rectified. So to close the business account, corporations need to send the IRS a letter that includes the complete legal name of their business, the EIN, the business address, and the reason they wish to close their account. If they have a copy of the notice that the IRS issued with the EIN assignment, they should include that with the letter. They should write to the IRS at Internal Revenue Service in Ohio 45999. Corporations that 1. made a federal tax deposit or other federal tax payment, 2. are liable for any business taxes, or 3. are notified by the IRS that the business tax return is due, must file the appropriate tax returns before the IRS can close their account. So again, you can't really close out the EIN number if there's any outstanding stuff. You owe a tax return, you owe money, the corporation owes money because they're a separate legal entity. We're talking about the corporation owing stuff. And so you got to get all that wrapped up before they can basically close out the EIN number. For more information, there's links to this information down below. That includes the publication 542, Corporations Closing a Business Video, Small Business and Self-Employed Tax Center, Paying Yourself, publication 3402, Taxation of Limited Liability Companies. IRS provides guidance under the CARES Act to taxpayers with net operating losses. There's links to those items here. There'll be a link to this in the description.